Hi, welcome to albertohartley.com, your friendly neighborhood real estate person. So today we're going to talk about a couple of headlines. Let me brag a little bit on myself. Check this out right here. Boom. Is the Fed blowing a new housing bubble? I just wrote a blog about this, although this article is much more articulate than mine. And it's actually really good by Mr. Pinto, who's a resident of the American Enterprise Institute. Read this. It really goes into the low interest rates. So I've been critical of the low interest rates for years because it artificially creates a new bubble in the housing market. This guy does a great job about driving buyers into a marketplace that doesn't really exist, because when rates are really low, you don't get a proper valuation of the house. So, and he puts it at the feet of real estate agents, their lobby. And anyway, it's a really good idea. The lowest level in 100 years. So anytime you see that, this is just more of government tinkering with the real estate market. It's a negative thing. On the backs of that, you had also in the Wall Street Journal today, for you guys who don't read the Wall Street Journal because you have a life and you're cool. But those of us who don't have a life, we read this. And there's two articles right on the front page. First of all, scant relief and foreclosure payouts. So I think the federal government got $15 billion, and some of the borrowers are going to get like $300. So once again, that seems fair. Those who lost their house get $125,000. 1,000 people in the military got foreclosed on improperly, and they never defaulted on their loans. So that median housing price in the nation's around 180. So their payoff's 125. So you don't have to be really smart to realize somebody got screwed, and it wasn't the banks. And some poor guy in the military who was out fighting for his country in Afghanistan, gets his house foreclosed on, never defaults on his loan. And so, you know, cool beans, he gets a $125,000 check. He probably borrowed like 200 grand. So that seems fair. This is what happens when the federal government basically is using fines as a taxing tool. The federal government took $15 billion. The homeowners got $3.6 billion. Once you pay that out to everybody, you have about 1,000 people getting $125,000, and the rest of them are getting checks between $300 and $1,000 a piece. It's just not fair, but that happens in class action suits. Instead of the federal government putting that money aside to really help people, put them where they were before this crisis took place. But that is also dovetailing in with the fact that FHA and some of the regulators have stopped investigating foreclosure abuses because it's just too big of a problem for them. So they've stopped investigating those. They've done this payout. So the bank mortgage companies have just said, look, hey, we're out. Sort of like BP when they can destroy a whole ecosystem and pay a $20 billion fine. So once again, the rich get rich, the poor get poorer. But you guys have got to look at this. The bottom right here, it says there's a 13% rise in land prices. So in a housing recovery, we have low interest rates and demand for houses are going up because low interest rates are creating more demand. What does that do to prices for homes? Well, it increases the demand for houses, and therefore the price of homes go up. Land becomes more expensive. Materials have doubled in the last 6 months. So lumber has literally in some places tripled in value. Well, if lumber is more expensive, how much is your house going to be? It's going to be more expensive. So if you're a low-income person or middle-income person, your idea of home ownership is getting further and further and further out of reach. Sounds like great policies for everybody. So once again, the real estate market, if you're going to mess with it, if you're a government, you're going to mess with it, you have to make it to where it's accessible. Low interest rates don't do that. What does that is tax incentives, basically making sure that demand stays equal with supply, and allowing people to hit a market number that makes sense to them. So if that's going to be a focus of our federal government, the housing is going to be the sort of the coal burning part of our economy. Keep messing with it. It's going to create highs, dips, and spikes and valleys that are not going to be sustainable for the majority of Americans. And I think that's the mistake that's happening in our economic policy, is that it continues to widen the gap between the rich and the poor. And I think it's really bad policy. So instead of helping developers build high density, really good low income to middle income housing that everybody can afford, they are continuing to drive people into houses that drive land prices up, and more regulation on land development forces the price to go up further and further. At some point, it's just not going to work. So once the interest rates creep up, the article basically talks about once the rates creep up, you're going to have this huge bust, because people are not going to be able to afford these new houses because the interest rates are higher and their monthly payments are not going to catch up with their stagnant wages. There it is. Be careful as soon as the rates start going up. So if you're a developer and you're looking to buy a lot of land, you better be careful and make sure it's bought at the right price. So take a look at these articles. Foreclosure paths, really interesting. Land prices going up, and then that Fed bubble. You can check out elbert.hartley.com and look at our blog on that to kind of give you a brief overview. This article goes a lot more detail. So good luck out there, and buy and sell great. Thanks a lot. Bye.